In this video, I'll be sharing with you how to trade the divergence trading strategy. There are many advantages to trading divergence. One of the greatest advantages of divergence is that it gives you a prior information or a prior idea of what might happen. I'm using the word might because there is nothing definite as far as trading is concerned. So it is all about probability. There's a tendency that it might happen, and there's a tendency that it will not. So, having established that, divergence helps us to identify reversals before it is being presented on the actual price action. And once you can be able to identify reversal or identify this intended price action, it can put you in an advantage, give you an edge over the market. For instance, if you are looking for opportunity to enter into a buy trade, this particular act alone can help you to make early entry. And if you already have a running trade, that is an existing trade that is running, this particular act can as well help you to exit so that you don't make the money and then end up losing back the money to the market due to price reversal. So, having established all of that, now what is divergence? So, I'll be explaining to you what divergence is, how you can identify divergence, and exactly how you can trade divergence. So let's begin. What is divergence? First of all, divergence is a price disagreement between the price action on the main chart and the indicator window. When I'm referring to this indicator window, I'm referring to this setup you are seeing. So all of this zone is what we refer to as indicator window. While here is our main chart. So this is our main chart, and then here is our indicator window. So the divergence is a disagreement between the price action on the main chart and the moving average on our indicator window. So let me briefly run you through the setting. If you are coming across this video for the first time, the first is moving average. The shift is 0, method is exponential, you apply to close. The second is still moving average, period is 10, method is exponential. And then the other one is moving average, period is 25, and the method is exponential. They have our RSI, of course. You can see all of this. Here are the levels, so you can edit, you can delete, and you can add. So depending on what you want to do. And then at the end of the day, you change these styles here to the background of your chart. So if your chart is black, can you change that color to black? Then here is our commodity channel index, period is 14. So you can take a screenshot of all of this and do the setting right away on your screen. And if you've done it correctly, your chart will be looking exactly like mine. So let's proceed. The divergence is a disagreement between the price action on the main chart and the indicators at the window. So now let's go into looking at how to identify divergence. Now in an uptrend, divergence in an uptrend, for instance, you'll be seeing price making higher high, higher low, higher low, higher high, right? But if you come to your indicator window, you realize that your indicator window will make a higher high and then it will be going low. So if you should connect a trend line to your structural point, you'll be having something like this for your main chart, and on your indicator window, you'll be having something like this. So in this scenario, what this is telling us is that if, for instance, we are in an uptrend and it is an existing impulsive move, and you begin to get this divergence happening on your main chart and on indicator window, it begins to tell us that price is about either to make a retracement or which can later break structure. The most important thing is price is about to make a retracement. Okay, and if, for instance, price is giving higher high, higher low, higher high, higher low, higher high, and then your indicator window, which has been going up, suddenly begins to do the opposite, and then you spot that this is your divergence, you have identified this divergence, it simply means that reversal is intact. But the truth is, this reversal will not happen immediately. That is why I said it is only communicating to you that this is a tendency of what might happen, that the momentum of the buyers is dropping. So if you have a running trade, you might need to close the running trade or you take partial. And if you don't have a running trade, perhaps you are planning to jump in, you should know that something different is about to happen. So that is what that means in an up scenario. And if this is a pullback and you want to sell, if price is pulling back, definitely price will be going up this way, right? And then you will now get your indicator doing the opposite. So in line with the trend, divergence plays out almost 80 to 90% accurate. If in a downtrend, you'll be having something like this, but your indicator window will be coming down and subsequently you see it going up. So you realize that price is making a higher low, while your indicator window will be making a lower, your main chart will be making a lower low. Now you will appreciate this more when we begin to show it on the chart. So let's look at any of this. Now you must take note of this, please. You don't use divergence to catch reversal. What is reversal? For instance, considering this price movement, for instance, this price has been bearish. This is USD JPY and it has been selling. We are having a lower high, lower low, lower high, and then a lower low. So it has been selling. So what are we saying in essence? We are saying you don't go and begin to look for divergence, trying to say that it has sold for a long time. Now that I have divergence, it should be buying or it will start buying. No, that is the wrong way to use divergence. Rather, we look for opportunity to use our divergence in line with the trend. So for instance, in a downtrend, instead of you to be looking for divergence to buy, this is wrong. In a downtrend, do not look for a divergence as your signal to buy. Rather, look for a divergence as your signal to sell. In a downtrend, use divergence at your point of interest for sell confirmation. And in an uptrend, use divergence as your signal confirmation for buy entry. So let's look at how we can identify divergence. So let me show you exactly what a typical divergence look like. Here we have one. Just look at this, follow me carefully. Here you realize that price is making higher high. Beautifully well. Then look at what happens on the indicator window. You realize that this indicator window is making a lower high. So this is a typical divergence. You can see that. You see that high we are having there. And then we see our higher high and what the indicator window is giving us. So this is contrary to what is happening. So you realize that this is a high, this is a high. But this indicator window is supposed to be giving us a higher high because this is a higher high. But instead, it is giving us a lower high. So this disagreement, look at what happened. After that disagreement, you can see how price begins to move. Price now move to the downside. Do you see that? So that is exactly what we are referring to as divergence. So this is how you can identify divergence. Look at this. Here is another one. Do you see that? Yeah, look at that. And then you see how price respect it. You can see that. So this is sloping down while this is up. So this disagreement, if you have been buying from this zone and you begin to see this disagreement between this indicator window and your main chart, it's a sign for you to exit your trade or break even or take partial depending on what you want to do. But what I was saying in essence the other time is, do not use this to begin to anticipate reversal. Not that it will not play out, but most often, even if it will play out, it might drag you a little. And perhaps you don't have much capital to that extent. For instance, look at this. Here, from this point to this point, that is divergent. And look at here. Look at here carefully. Think, yeah. And then look at here carefully on this line. You realize that that is divergence there. So you see, but despite this divergence, what happened? Price still pull back a little and then push up again. So this is because this divergence is predicting reversal. It is not as accurate as the one that is in the direction of the trend. Now let me show you something. Here we have a divergence. And this divergence now is for a buy. Look at it. Now in this scenario, we have equal low. Perfect. So this is an equal low. And then look at our indicator window. You see this? This is our indicator window. So we are having equal low, but our indicator window is giving us a higher low. So this is a divergence. And this divergence, price has already been in an uptrend above our EMA 200. So when this divergence play in line with the trend, so price will test our point of interest, which is the moving average, and giving us a bullish engulfing candle. You see it play out perfectly without dragging. That is because it's in line with the trend. So now when you get your divergence, how do you make entry? I just explained now. For you to make entry, it has to be in your point of interest that you are seeing this divergence. What is the point of interest we are talking about? This divergence has to be found in another block, or your area of support and resistance, or your area of trend line, or your area of moving average. Like in this particular one, you see that divergence happens, right? And then price is retesting our 200 EMA. And you can see that bullish engulfing candle there, which is now our buy entry signal. So we do not just jump in blindly because we see a divergence. We also wait to get a price action. You can as well use your trend line. You can see that you place your trend line across and then you wait for price to break out of this trend line. And when price break out of it, you can now make your trade entry. This is in line with the direction of the trend. I have to make that emphasis again. And then look at this. Price is giving us a lower high and a lower low. So look at what happened here already. We have a breakout structure. So if you are using a naked chart to do your trading, you will understand what I'm saying now. So in that breakout structure, you will realize that we already have a change of price direction because the structure has been broken, but the moving average is yet to cross. And then look at that. We have a divergence right there. Do you see that? And because it's now in the direction of the trend, you see it plays out without delay. You can as well pick your moving average to mark it out this way. Your trend line, I beg your pardon. You see now, price break out of the trend line, boom, and you are into that trade. So this is exactly how we can go on and on and on to take advantage of our divergence trading strategy. I'm trying to get a downtrend scenario so I can illustrate this. I've done illustration, many of these illustrations using an often perfect. Let's look at this now. Now you have to be very, very more attentive to this because this is tiny. Perfect. Now you see that the previous move is even a bit higher than the other one. Look at this. This bearish candle is still higher than this bullish candle. But however, that is a divergence. Now look at our indicator window. You see it is going down. It's slanting down. Why this is pushing up. This is pushing up while this is pushing down. So that is exactly how it works. This is in line with the trend of the market. And you see how it works perfectly well. Thank you so much for watching to this time. And if you are yet to subscribe, what are you waiting for? Please do well to subscribe to the channel, turn on your notification bell so you'll be the first to get notified when we upload our next video. If you have any question, please you can ask your question using the comment section and I'll be there to answer you. Thank you so much and see you in the subsequent video.